So who are we exactly? Well, we're a company where our mission statement is to help people navigate the complex world of real estate investing, real estate investing, and we really want to be that team that has your back, and to provide the complete solution, everything you need to be successful, whether it's partnering with people like Tony and Lanescape, or you need a lawyer who understands land severance process. Any of these things, we have the right resources to help you reach your goals. And we help figure it out. This is one of the big things that we pride ourselves on. There are a lot of companies that do research and analysis on real estate in Toronto. We try to synthesize, and we do synthesize business cases, business models that work against the research that we've done. And we walk the talk as well. We are investors against these business models that we've come up with. Next slide, please. And to this point, we have a lot of holdings in Toronto. We have a bunch of awards. We've featured on HGTV and stuff like that recently. This is not, I would say this is not to impress, but to impress upon you that we come from a place of experience. We do know what we're doing in this area.
We actually, we have written a bunch of articles for HGTV. We've been tapped to do so in the last 6 months or so. And actually, one of the articles we co-authored with Lanescape and with Tony. So that's up there on our website and on hgtv.ca.
It got heavily edited down.
Yeah.
They are lighter articles, but we have the content there, but it's not all.
So if you want the unfettered access version, that one's on our website, and then the heavily edited down version is on the HGTV website.
We're too wordy, I guess.
Next slide. Yeah.
So a lot of people are like, you guys sound interesting. What is it you actually do? And how could we work with you? There's really 4 areas of the company. So the first one is advisory. This is what makes us unique. And this is the education, running seminars, things like this today, and importantly, building out a plan on your real estate investing journey, understanding your goals and helping you create a path. That's what we do in advisory. The next thing is property acquisition, our realty part. So you're like, okay, I went through the advisory process and it looks like I should get 2 or 3 triplexes over the next 5 years. The realty team actually helps you execute on that, because as I'm sure you'll learn today, you can't just simply buy a property with a laneway and expect to build a laneway suite. It's far more complicated than that, especially if you want to have, let's say a legal basement suite that goes along with your laneway house. Whatever your output from your advisory, the realty team helps you execute on that. The next thing is renovations and construction. So you got to build that laneway suite. You got to, do the underpinning to get legal in the basement, whatever it happens to be. We do everything from kitchens and bathrooms, cosmetic renovations, all the way up to, complex builds, multifamily, legal multifamilies, laneways, things like this. And then lastly, we partner up with people to help you manage your property. So come time for you to actually find and fill it with tenants, we do the leasing, and then we have partners on the property management side. And this is our team. I just want to welcome, we have a new addition. So Ali Khan, he joined our team just recently. So welcome to the Volition team. You may or may not be interacting with him.
The more important thing is that we finally hit our diversity quotient.
Yes, we were looking a little there. So, we're really excited to have Ali Khan on board.
Yeah, he's going to power our realty team to new heights. So
yeah, and we are still hiring. We are looking for people who are interested in working in the realty side of things. We fortunately are blessed with a lot of activity and a lot of business, and we're looking for people to help us, fill out the realty team. So if you're interested, let us know. And as Matt mentioned just before the presentation started, we were invited by CMHC to speak about that missing middle because we are very involved in it. And we had a discussion with them. We have more coming up when we reply to them on basically that missing middle. If you're not familiar with that term, that is rental and accessible units that are not single family and not large multifamily. So everything from additional suites in homes, laneway suites, up to, let's say 3 or 4 story walk-ups, right? So small apartment buildings is what people are calling the missing middle. And CMHC has a mandate to try to provide more housing in that area.
The problem is, and you probably know this if you're from Toronto, you have a bunch of single-family homes, and then you have these 90-story towers. There's absolutely nothing in between, right? There hasn't been an apartment building that's been built, like an apartment building, that's been built in Toronto in many, many, many decades. Many reasons for that. But anyway, there's nothing in between. And I lived in Europe for a while, and that is just the status quo in Europe. 3, 4, 5, 6 stories, maybe with another, maybe not. But we don't have that here. And so we have a problem of getting density. And so CMHC has asked us for our input into help shaping some of the financing policies around how they can better serve mom and pop investors to be able to start building out more suites. Yeah, cool.
Awesome. Next slide, please. And I say this every time we have a meetup. A lot of companies have their customer statement or whatever it is. This is our customer, what we want to be for our customers. When we first started investing ourselves, and I can speak for myself directly, did everything wrong. I didn't know what I was doing. I was buying the wrong stuff. I didn't have the right tenant profiles. I could do the math behind it, but it wasn't a comprehensive picture when it came to real estate investing. And this is really what we try to do for our clients, is break through the maze of real estate investing and help be a guide through that whole process. And this just a reminder to all our new Volition clients, if you have been missed on our WhatsApp chat, please let us know. Just a reminder, this is just for our current investor and advisory clients that we are working with. So if you are not aware that you're an investor or an advisory client, you probably shouldn't be on this because we always get asked, oh, can I come on this? But this is for our active clients. But if we did miss you, because we have a number, just let us know. We'll make sure that you are added.
It's a self-help group for investors.
Self-help / safe space. Like, want to complain about the tenant that's been giving you a hard time, that is the place to do it. So,
yeah.
Cool. So diving into the market minute. So quickly here, I got, we've got some pretty interesting stuff tonight, so I don't want to spend too much time on this. Sales volume through 2021, a little lower than what we saw in 2020, but the year over year is not what we should be looking at. 2020 was an anomaly with COVID, with basically the shutdown of the industry in the springtime, and then all that volume moved into the late summer into fall. So any of these articles that you've been reading that it's like, oh, sales volume is down year over year. Yes, it's true, but why would you use an anomaly year to measure this, right? Basically, April and May were shut down the entire industry. So, better is to actually look at previous years, 2019, when things were normal, right? And we are increasing in sales volume. And if you've been active with us as a client, you're seeing there's a lot more transactions happening these days. But let's go to the next slide, and I'll continue explaining the but behind this. Average resale home price. You'll see there's a bit of a tick here in September. What I do expect to see in October is a bit of a stabilization. We were feeling when the fall market first hit in September, just this jump in price, especially in the type of properties that we're trying to invest in. It seems to have stabilized, though. We're not seeing this, thank God, we're not seeing this continual jump in pricing. So I do expect October to be similar to September. I don't expect to see another big jump. New listings. So inventory continues to be tight. It did come back up because, through July and August, we had some very low inventory levels. And some of our active clients were like, oh my God, did we just, is it going to be impossible to buy it? Did we miss the opportunity to? But September did come around, a bunch more inventory has appeared on the market. We were able to execute on some deals. I expect October to be very similar, not as good as previous years, but there has been inventory. It's not impossible to buy a house right now. It is highly competitive, but it's not impossible. It's certainly easier than it was in August or July. So at Volition, what we love to do is take the general information that we get, but drill it down much further. So we're actually looking at things at a granular level. So we take all the information because averages are interesting, but really doesn't tell us, we know that real estate is hyperlocal. What's happening in Forest Hill is going to be very different from what's happening in the Annex, which is very different from what's happening in, Dovercourt, Wallace, Emerson. So if an average just tells me what's happening across all those places, it's not particularly useful when we're investing at a street by street level, right? So we try to do that and break it down to a much more granular level. So the next slide, please. So this is what we're seeing in terms of our downtown single-family detached homes. So this is broken down by Treb neighborhood, and this is just for detached properties. And it's following like for like properties month to month. So looking at the single-family detached, this is what we're expecting to see. This is what I mentioned that there's been a bit of flattening of that price increase. So if you look at the tail end of this graph here, you'll see there was this kind of bit of a spike through the beginning of the year, and then in some areas through August and September, this is flattened off kind of across the board. So I don't like to time the market. You'll hear me always saying it's not about timing the market, it's about time in the market. But if you are trying to time, this is probably a good time with relatively flat pricing, low interest rates, and some more inventory out there. Condos, this is a similar story to what we're seeing in single family, but a little less drastic. Through all the areas that people are investing in condos right now, we are seeing again a flattening off of pricing, not those huge spikes that we saw through the beginning of the year. So it's been a good time to invest. And then how does this contrast with all the other areas? Because we focus quite heavily on the downtown core. So let's look at some of the other neighborhoods outside the downtown core. So we'll see here, it's a similar picture, but not as much of a recovery. If you recall back to the downtown slide, we've recovered from the drop that happened in 2017. In most neighborhoods now, over the last, let's say 4 or 5 months, is where we've seen that recovery finally from the peak in 2017. It has taken a lot longer, and this is typically what we expect to see. The downtown core is a lot more stable, and the recovery takes longer outside the downtown core. Next slide. Oh, cool. We're into the case study for the Little Italy Triplex.
We have lots of time. Wow.
I know that we're rolling out the red carpet for Tony. Actually, we were trying to keep it very tight and start at 7:30 for him. And so now we can take a little bit more time on the actual case study. For those new to Volition, we usually cover off properties that we're purchasing, or in this case, the case for buy and hold, which is looking at a then and now. What we're going to do is get Shelby's help to go to the next slide. And I'll speak a little bit, actually, this is my own property, and it's a legal triplex in Little Italy. So as Ming said, there's often looking at time in the market rather than timing the market. And this case study is meant to illustrate that. Just as a bit of context, this is a legal triplex. It has a relatively short lot, but it's quite wide. It is not eligible for a laneway suite, sadly. And it consists of three one-bedroom units, actually two one-bedroom units, and one is a 1+ den. They are ranging from about 700 to 900 square feet. Back in 2017, when I purchased it, as a Volition client back in the day, the purchase price was 1.2 million. And the cosmetic reno, which is basically for all three units, adding new kitchens, new bathrooms, flooring, and so on, was 175,000. Why I'm sharing the numbers is that in reality, there's always some risk with real estate investing. And when I did my appraisal, it came back at exactly the purchase price plus cosmetic reno, which was 1.375 million. Oftentimes when we do these projects, we look for a higher lift after the reno. So our target after repair value was hopefully higher than that. And in this case, there are a couple of things. One being that the after repair value, or what the appraiser thinks the amount should be, is often different from the market value, which is often higher. The other piece is that at the time, there's actually a lot of mortgage regulation changes taking place, and the banks wanted to be pretty conservative. So what happened the year after is, revisiting the situation by mortgage brokers, having stabilized and putting the tenants in the units, being able to demonstrate the rents that the property was achieving, I was able to achieve an appraisal of 1.6 million. Since then, there's the grind of being a landlord, and Chris will talk a little bit about leasing after that in the next slide. And right now the market value, I'm always a little bit conservative, so I would say the market value based on recent comps is 1.8 to 1.9. So hopefully this illustrates that, yes, buying it, doing the reno, it's a bit of a slog to the whole BRRRR strategy. But as long as you remain in the market and manage through it, there's a lot of upside available with the right property. So over to Chris for the next slide.
Sorry, before we flip over to Chris, if you don't mind, because we got a little bit of time here.
Yeah.
If you're an outside observer, you might see this as like, whoa, like Flo, she's some rich girl who bought a 1.2 million.
I'm wearing a t-shirt from Nordstrom Rack, so hardly.
And spent like 200K on a cosmetic reno. And I think, if you don't mind taking 1 or 2 minutes, just like, how did you get to the point that you were buying a triplex? It wasn't like you just went and did it. You had all this money. It was condo. Then you lived in this to help, get the mortgage qualification. I think that if you don't mind taking 1 or 2 minutes just to tell a bit of that, I think that would be really interesting for folks.
Yeah, sure. I always forget that that's a thing I did in the past, to make a lot of sacrifices to get to where I am today. And so I started from a 1-bedroom condo in Vancouver, which is where I was from, and building my way up through, buying a 2-bedroom condo in Toronto, living with a roommate for a few years actually to build up equity, raise the capital. And I still regret it to this day, but I had to sell that 2-bedroom condo to form the down payment for this little Italy triplex and move in, and then go to the reno, live without a kitchen for a couple months on the top floor, the white one that you see here, and in order to qualify for the mortgage. And so I think why Ming's calling this out is that, no one comes into this unless it's some sort of inherited money or you win the lotto. A lot of us have worked really, really hard in building blocks, and it absolutely is achievable for anyone listening to this.
Yeah, like there's this big sacrifice piece, like living with a roommate, right? Like people ask me like, I want to build wealth, but then they don't want to make the sacrifices that are required. And, there's no have your cake and eat it too. In this case, Florence had a roommate, then she had to live with her tenants, right? And maybe that doesn't work. Everybody loves that knock on your door when, their toilet's not working, but, you have to give up something in order to make it work. And, now Florence has a very quite impressive real estate portfolio, because she's been willing to go through the sacrifices and
well, and I apply some of the learnings from this company called Volition. So
thank you. But yeah, I just wanted to call that out because I think that's a big part of this as well. It's not like she just parachuted in with a ton of money. So sorry, Chris, I didn't want to cut you off, but if you can take over now.
No problem, guys. Next slide, please. Yeah, so I just wanted to highlight some of the trends in the leasing area. And I was fortunate enough to help Florence with leasing 2 of her units in this Little Italy triplex of hers in late summer of this year. And I just wanted to highlight some of the sort of the trends that we saw. I know people are interested in sort of how the leasing market is and is it recovering and all those fun details. And so I just wanted to highlight, first of all, that so she did have her upper floor unit, which is the owner suite, available for September 1st. So we did have actually quite a number of people interested in this unit. So we actually had 12 private inquiries and 3 inquiries through MLS. So 15 in total. So we actually had the original listing for $2,895, and we actually ended up leasing it out for $3,100. So that's actually more than the asking price to actually a director in a tech firm. And to be honest with you, this this unit, obviously because it's such a unique unit, it wasn't difficult to lease. And I would think overall, again, Volition's business model, we really want to highlight just having buying in the right neighborhoods and attracting the right tenant profile. So that's, I would say, part and parcel of how quickly and easily we were able to actually lease up Florence's unit in the top floor. In terms of costing, it was very similar to what she was getting from a leasing company pre-COVID. The actual leasing company, because they were taking a monthly lease percentage plus a one-time placement fee, it actually pretty much ended up being cost neutral for Florence in terms of the actual monthly rent and the cost for her to lease it up. So yeah, overall, again, a great unit, easy to show and lease, and again, a great neighborhood for people to want to live in, Little Italy. And then the basement unit as well. We actually had quite a lot of number of people interested in this unit. Actually, it leased up in 7 days for September 1st. So we had 12 applicants. And because of such the high demand of this unit, the previous tenant actually gave us 2 months notice end of July, but we were actually able to lease it up in about a month. And we're able to allow that previous tenant to basically to leave earlier, in fact, because of such the high demand of that unit itself. So again, just wanted to highlight that because Little Italy being such an attractive neighborhood for our clients and the tenant profile that we're looking for, it was very easy for us to lease up these 2 units. And yeah, just to give a quick highlight to the leasing market, overall from May till about September 1st, we had a pretty significant recovery in terms of the rental prices. And yeah, we definitely do see that a little bit stabilizing now in the fall period of time. But overall, definitely some significant gains, trying to get closer back to the pre-COVID levels for leasing. But definitely really good signs for investors like everyone on this call today.
Cool.
So, yeah,
thanks, Chris. Actually, a couple of quick questions and call-outs. So that looks like a pretty good recovery in the basement unit. So can you just talk to me quickly about what happened with basements at the beginning of COVID and how basements are faring now?
Yeah, definitely a great question. I would say in the early part of the pandemic, a lot of people were, I would say, shying away from basements just because obviously with the pricing overall across the board being significantly lower during the pandemic, the difference between the basement pricing and say a 1-bedroom above grade bedroom suite with a window, there wasn't much of a massive price difference. So a lot of people were more attracted to just, okay, I'll just pay another $100 to $200 for above grade with a window versus a basement unit. So that was sort of a lot of people just really avoiding the basement suites early on in the pandemic. But now because pricing has recovered substantially, the delta or the difference between the basement and say the 1-bedroom large window, with a balcony or like looking out to a nice park, those units have gone back up quite substantially. So that delta has increased. So definitely more demand going back to the basement units just because of the larger difference in the pricing.
Yeah, that's cool. And thanks, Chris. Chris helped us author our most recent HGTV article. What was it called again? Trends that renters are looking for during COVID or something like that.
Yep, that's right.
Yeah. So thanks for that. A lot of great perspective coming from Fred, from Chris's corner. One last question: how did you end up getting higher rents? So you listed at what, $28.95, and then what happened after that?
Yeah, we just had basically we had 1 or 2 very serious prospects who really wanted that unit. So they ended up actually putting a bit more on top to secure that unit. And with having a director at a tech firm secure it, like she really wanted the unit, and she was more than happy to just put herself over the top to ensure to secure that unit.
Nice. So basically almost like a bidding war.
Yeah,
amongst
basically.
Tenants. That's amazing. Good stuff. That is a really nice unit, by the way. I'm not sure if you didn't get to see the pictures, but it's a 1.5-story loft style. The bedroom is up on this loft. It's super cool, super funky, super unique. Anyway, cool. Thanks, Chris. Thanks, Flo, for sharing your property.
Yeah, and I talked about Flo's a little bit of Flo's journey earlier on. Chris has actually had a very similar journey of sacrificing living with tenants, living in his investment properties, doing some renos himself. Neither Flo nor Chris has been handed these investment properties in any way. They've done it the tough way. And I'm sure if anybody's interested in connecting with either of them, just to learn about how they were able to do it, I'm sure they'd be more than happy. I'm volunteering them right now, and they're on campus.
They used to be greeters at the door at our in-person meetups. So they're no longer Walmart greeters; they are Volition team members. So it's been a great evolution.
If you want to learn about their stories, I'm sure they'd be more than happy to connect directly with you.